Palantir is no longer simply a data analytics company. Its software is used across corporate operations, intelligence systems, military planning, and battlefield decision-making. Chief Executive Alex Karp has even claimed that Palantir was responsible for most of the targeting in Ukraine. At the same time, the company's valuation has climbed to approximately 55 times expected 2026 revenue. That creates the central question for investors. Is Palantir becoming the operating system for modern artificial intelligence, or is the stock already priced for near-perfect execution? Palantir was founded in 2003 to help United States intelligence agencies integrate and analyze complex information. In September 2020, the company became publicly traded through a direct listing and moved its headquarters from Palo Alto to Denver. It launched its artificial intelligence platform, known as AIP, in 2023. Palantir joined the S&P 500 in September 2024, relocated its headquarters to Miami in 2026, and continued expanding beyond government work into commercial markets. Palantir's technology is built around four major platforms. Gotham is primarily used by governments, defense organizations, and intelligence agencies. It connects information from multiple systems and helps users identify patterns, plan operations, and make decisions. Foundry performs a similar role for commercial customers. It allows companies to integrate fragmented data and use it across manufacturing, healthcare, energy, finance, supply chains, and other operational workflows. Apollo manages the deployment and continuous operation of Palantir software across public clouds, private infrastructure, on-premise systems, and edge environments. AIP connects artificial intelligence models with an organization's data, security controls, and operational workflows. The goal is not merely to provide a chatbot. Palantir wants AI to participate in real business and government decisions while remaining connected to authorized data and human oversight. Palantir's business is now divided almost evenly between government and commercial customers. In the second quarter of 2026, government revenue reached approximately $990 million, increasing 79% year-over-year. Commercial revenue reached approximately $945 million, increasing 110%. Government customers still provide Palantir with a large, mission-critical base. But commercial customers have become the faster-growing part of the company. Palantir's military role comes from connecting different sources of information. On the ground, its software can support command data, operational planning, and targeting workflows. In airborne operations, it can combine sensor information and improve situational awareness. At the edge, it can support users working with limited connectivity across drones, ships, satellites, and remote systems. The same underlying technology can also manage logistics, readiness, and resource planning. Palantir does not independently operate weapons. Its platforms organize data, run models, and present information or possible actions to authorized users. Human operators and government institutions remain responsible for operational decisions. That distinction becomes especially important when examining Palantir's role in Ukraine. Ukraine has become one of the most prominent demonstrations of Palantir's technology. In February 2023, Alex Karp claimed that Palantir was responsible for most of the targeting in Ukraine. That is a statement from Palantir's chief executive, not an independently verified measurement. The company has also supported data analysis connected to battlefield intelligence and the documentation of possible war crimes. However, the financial context is equally important. In its second quarter 2026 filing, Palantir stated that operations related to Ukraine, Israel, and the broader Middle East were not material to its financial position or results. Palantir's military importance should therefore not automatically be treated as proof that recent conflicts caused the company's financial growth. The company's defense position extends beyond Ukraine. The United States Army is integrating the Maven C2 smart system into professional military education and operational training. Maven combines information from multiple battlefield sources and helps commanders build a more unified operating picture. NATO acquired Palantir's Maven smart system in 2025 to support AI-enabled planning and decision-making. In 2026, Admiral Pierre Vandier, NATO's Supreme Allied Commander Transformation, said that, as far as he knew, there was no real competitor for Palantir at that time. That statement demonstrates Palantir's current position, but it also highlights a risk. European governments increasingly want greater control over sensitive data and less dependence on American technology. Palantir's relationship with the United States Army was reinforced by an enterprise agreement valued at up to $10 billion over as many as 10 years. But the words "up to" are essential. $10 billion is the maximum purchasing ceiling, not guaranteed revenue. Actual revenue will depend on future task orders, available funding, and the Army's requirements. The agreement still gives Palantir an important position within the Army's software ecosystem. But investors should not record the full $10 billion ceiling as sales, backlog, or committed revenue. Palantir's second quarter 2026 financial results showed why investor expectations have risen so dramatically. Total revenue reached $1.935 billion, increasing 93% year-over-year. The growth came from both sides of the business, but the United States remained the primary engine. United States commercial revenue reached $764 million. That represented growth of 149% year-over-year and 28% quarter-over-quarter. United States government revenue reached $809 million, increasing 90% year-over-year and 18% quarter-over-quarter. The distinction between total segment revenue and United States revenue is important. Total government revenue was approximately $990 million, while total commercial revenue was approximately $945 million. The smaller United States figures represent geographic subsets of those broader segments. Palantir also reported unusually strong profitability. GAAP operating income reached approximately $912 million, producing an operating margin of 47%. Net income attributable to common stockholders reached approximately $1.062 billion, and diluted earnings per share were 41 cents. On an adjusted basis, operating income reached approximately $1.194 billion, with an adjusted operating margin of 62%. These figures should not be mixed. Adjusted results exclude certain expenses, including stock-based compensation. GAAP results provide the standardized accounting view, while adjusted results show the performance measure emphasized by management. Palantir's Rule of 40 score reached 155%. This combines the company's 93% revenue growth with its 62% adjusted operating margin. The figure is exceptional for a software company, although it depends on using the adjusted margin. But profitability is only one part of Palantir's financial picture. Cash generation was also strong. Adjusted free cash flow reached approximately $1.22 billion during the quarter, representing a margin of about 63%. Palantir ended the period with approximately $9.2 billion in cash and United States Treasury securities and no outstanding debt. This gives the company substantial capacity to invest in research, infrastructure, hiring, and expansion without relying on external borrowing. Contract activity provides another measure of demand. During the quarter, Palantir closed 220 deals valued at $1 million or more. 98 were valued at least $5 million, and 73 were valued at least $10 million. Total contract value reached approximately $3.373 billion, increasing 49% year-over-year. United States commercial total contract value reached approximately $2.13 billion, increasing 153% and setting a quarterly record. Contract value is not the same as recognized revenue. It represents the potential value of signed agreements, while revenue is recorded over time according to the contract terms and delivery of services. Management raised its full-year 2026 expectations. Palantir projected revenue between $8.150 and $8.158 billion. United States commercial revenue was expected to exceed $3.424 billion. Adjusted income from operations was projected between $4.889 and $4.897 billion, while adjusted free cash flow was expected between $4.5 and $4.7 billion. These are management forecasts, not achieved results. Palantir must continue executing through the remainder of the year to meet them. The company has several major advantages. Its platforms are deeply embedded in mission-critical workflows, creating high switching costs. United States commercial adoption is expanding rapidly. Palantir is GAAP profitable, produces substantial cash flow, holds approximately $9.2 billion in cash and treasury securities, and has no outstanding debt. But the risks are equally significant. Government revenue depends on budgets, procurement cycles, task orders, and political decisions. Contracts can be large, but their timing can be uneven. Palantir also faces competition from cloud providers, enterprise software companies, defense contractors, and specialized artificial intelligence platforms. Stock-based compensation can dilute existing shareholders. Palantir's work with military, intelligence, immigration, and law enforcement organizations also creates privacy, ethical, political, and reputational concerns. European governments are increasingly debating whether sensitive public sector systems should depend on American technology providers. Finally, there is valuation. Using a market capitalization of approximately $446.5 billion on August 20, 2026, and the midpoint of management's full-year revenue guidance, Palantir was valued at approximately 54.8 times expected 2026 sales. That multiple does not mean the company must fail. Palantir's revenue growth, profitability, cash generation, and strategic position are objectively strong. But such a valuation leaves little room for slower growth, reduced margins, contract delays, political pressure, or stronger competition. Palantir may be strategically important and financially exceptional. The harder question is how much of that future success is already reflected in the stock price. This analysis is for educational and informational purposes only and does not constitute investment advice. Every company has a story. We tell the numbers.